Hello investors and traders. This video will be about the RMO indicator. I will go over how to use this indicator in your investing or trading strategy and some hidden secrets we have discovered. RMO is not one indicator, but more of a rule-based system of if and thens. If this happens, then we do this. If that happens, we do that. It is, get ready for this, a fantastic technical indicator, but for me, as usual, one indicator or oscillator does not make a strategy and should be coupled with other indicators and philosophies for a weight of evidence decision. I also have an interesting way to use the RMO to assist in predicting the overall market. If you predict the overall market direction, it will be easier to execute a winning strategy in a top-down approach. So you know the catchphrase: study it, analyze it, adapt it. The RMO, Rahul Mohindar Oscillator, which was developed by guess who? Rahul Mohindar. The RMO is a rule-based module offered on Metastock with the standard version. RMO key takeaways. It is a system-driven approach with no emotion needed to trade, just the rules. It is an awesome concept. It is based on 3 indicators. RMO gives the primary trend. RMO is below or above 0. Above 0, bullish. Below 0, bearish. It is the primary longer-term trend. Swing Trade 2 is a short-term trend, and Swing Trade 3 is a medium-term trend. When all 3 are in one direction, may not happen in one day, it is a bullish or bearish sign, with usually the first breakout being the strongest. RMO. The RMO detects the long-term primary trend of the asset by smoothing out short-term gyrations. RMO is below or above 0. Do not worry about the size of the histogram up or down. The RMO helps establish the primary trend. The RMO will not give excessive changes. If you look at the bottom of the Metastock chart, you can see easy if the RMO is above 0 or below 0. It gives an RMO bullish sign or an RMO bearish sign. Let's go to the chart. In this chart, the green histogram is the RMO indicator. As you know, the RMO indicator will smooth out short-term gyrations. As you can see, most of the time, the RMO has given a clear signal of a long-term trend of bullish. The 3 times that it went bearish only for a week to a few days, and then continued the streak of the bullish trend. This is a chart of the QQQs. It helped a lot of people during the COVID-19 initial first crash. The RMO is above 0. It is a positive sign. When the RMO is below 0, it is a negative sign. There will be other indicators to follow this first primary long-term RMO signal. Swing Trade 2 and Swing Trade 3. If you look at the chart on the Metastock system, the second window is the swing trade 2 and the swing trade 3. Swing trade 2 is the pink color, which shows the short-term movement of the asset. Swing trade 3 is the blue color and is the medium direction of the asset. It is positive when it is above zero and negative when it is below zero. If all three trends are positive, you take a buy trade. If all three trends are negative, you take a short position. Arrows on the fourth window on the chart, if you look at the arrows on the bottom of the chart, are swing trade 2, the pink, which is short term. The medium term is the prices on the chart, which is swing trade 3. Positive is blue and negative is 0. When pink overtakes the blue, we get a buy. When the blue overtakes the pink, we get a sell. Remember, first breakout is the most powerful. Try an initial breakout. Back to the charts of the QQQs. As we said previously, the RMO Long Term indicator is positive. It is above 0. Now we're starting to look at swing trade 2, which is a shorter term indicator. On the chart, it is the blue arrow showing that it is turned positive. Then we look at swing trade 3. Blue histogram. Blue prices. When all three, RMO, swing trade 2, and swing trade 3, gives you a positive sign and is above 0, it is an indication to go long. As you see on the QQQs, during March 2020, COVID-19, it gave you a clear indication to go long, a bullish sign. All three indicators gave you the green light. And vice versa. On another stock pattern, if the RMO, long-term indicator, below 0, with the swing trade 2, confirmed by the swing trade 3, it is an indication to go short and definitely sell all your positions. One difference, the way I trade the RMO, is I have other indicators that look at the macro, the overall trend. If the overall trend is bullish, I do not take any shorts on the RMO. So I only use the RMO going with the overall trend of the market. Please look at other videos about technical indicators predicting the overall trend of the market. We have been in a bull market for a long time in the US markets. So I use the RMO a lot on the buy side. In other markets, maybe an international market or the gold market or the bond market, I look at the overall market, top-down approach, forest to the trees, macro to micro. Then I have a bias towards that side when I use the RMO. It has greatly increased the statistics of my RMO. Volume is tracked on a 50-day moving average. When you have volume on the asset higher than the 50-day moving average, it is a powerful sign. Gasoline on the fire. I love the rule-based system of the RMO with added insight from the volume. And don't forget, trading with the overall trend of the market. Volume is a gauge how powerful the buyers are. I have another rule with the RMO. I never trust a breakout that is not accompanied by significant increase in volume. There is no specific magic number or level of volume. I like 1 week volume spike that is at least twice the average volume of the past month. Higher, of course, is better. Or a volume build over the past 3 to 4 weeks, coupled with at least some increase on the breakout week. No matter what it no matter what it is, no significant increase in volume, I avoid the buy. The trigger to enter the trade is above the high to the left, and the sell or short below the low after the trigger to the left. A usual technique used. I have also seen a close above that high is very important. So if you break and does not close above it, it is not the best sign. Also, focus on the volume and especially the close. The trigger. Let's look back at the chart. To enter this trade, if you look back and see RMO, long term positive, swing trade 2 turns positive, swing trade 3 turns positive. You look back to the left of where it just turned positive, and you see that you have on a close a higher number, a higher price. This is a very good sign that this is off to the races. I especially like gap ups and gapping above to the left. This works vice versa for the short side. I also look at high volume on the breakout. And these are great signs that this is off to the races. Combining RMO with a few other techniques works out very well. Specifically pay attention to the close and not a fake breakout. The last half an hour, 45 minutes of the trading day. Is it closing towards the high? Did it close above the breakout? Important signs. The third window on the chart is the exit signal. When the oscillator hits the higher levels on this chart for a buy, ROM recommends taking some profits. This works like an RSI, the exit strategy. Let's go back to the chart. If you look at the third window, you'll see the exit swing signal. When all three indicators line up, RMO, swing trade 2, swing trade 3, and you're starting to make money, it may be a good time to take some of the profits. The RMO indicator believes when it reaches a certain level, hitting above 80 to 100, to take some of the profits. And when you're going short or time to buy, you look from 0 to 20. What I have seen, this works very much like a PS RSI. At certain times, this is probably the least effective of the RMO. Everything has worked out so great for me. But letting the winners run, especially when it's RMO bullish, has always been a good plan for me. In all fairness, Rahul has said when you are on the buy side and it reaches 80 to 100 to start taking profits and then re-entering when it gets to 0 to 20. So it does make sense. Just in my experience, having the winners run has been a greater advantage for me, or greater profits. Not recommend the RMO strategy enough. But some further insight by me feels the RMO is a combination of MACD, CCI, and the RSI. I have found an interesting approach of looking at the RMO. If you believe in the principles of macro to micro, top down or forest to the trees, you will be very interested in my findings. Just imagine taking the S&P 500, New York Stock Exchange Composite, NASDAQ, and the Dow Jones Industrial. Run each one separately under the RMO, Swing Trade 3, Swing Trade 2, and even look at their exit strategy. Imagine if all of them were bullish. Would that not give a good sign of the overall health of the market? Imagine if all of them were bearish. Would that not tell you that any individual stocks you would be picking would not be a good play? All I did was to figure out the macro to go down into the micro. So if all four indexes are bullish, it is a very good sign that any security that you pick under the RMO will also be bullish also. Let's continue looking at the RMO as a macro indicator. Imagine running the Explorer just on the RMO bullish of each individual security. You will get a bullish number and a bearish number. If the bullish number is over 50%, it is a positive sign. If under 50%, it is a negative sign. I usually see around 74% is the most healthiest for a bullish market, and 24% seeing that it's very bearish. Now at extreme highs, 90% and above, or under 10%, I have seen it is very oversold. These are two ways that I predict the macro market using the RMO. Very helpful and very good. Key takeaways. RMO works in a variety of markets. I use it for Bitcoin, for the gold market, for the bond market, international. It is a very powerful indicator. All through this video, I have given positive reviews of the RMO, but it should not be used as a standalone indicator, but maybe coupled with other indicators to use a weight of evidence. One indicator does not make a successful system. Please watch some of our other videos like top-down investing, my investing philosophy, etc., to combine these indicators to make a rule-based strategy. So with the RMO, study it, analyze it, adapt it. Peace.